There's an office building meltdown happening as an asset class in general. Investors are losing their shirt. Now, we're Walk of Wealth. We talk about multifamily real estate investing. So why are we worried or even talking about office buildings? Well, there's a major shift happening as office buildings are starting to be converted into multifamily real estate. This directly impacts multifamily real estate investors. On this video, we're going to break down what's happening in the office building asset class, what's happening in multifamily real estate as it pertains to this particular vertical, and how it impacts you as an investor. So before we get started, I just want to take a chance to sit back and really just thank everyone. We reached 1,000 subscribers for the channel, guys. I know it's not a lot for most, but it means the world to me. When I started this Walk of Wealth, I didn't know what to expect. It's been a tremendous journey so far. I've just met so many doctors, so many dentists. We've helped so many. I've learned so much, done hundreds of millions of dollars of business now. We've invested in over 1,500 apartment units, and our group, our community continues to grow and flourish. And if you haven't joined yet, our Facebook group called Financial Freedom for Dentists, that group is the best way to learn and get resources. We post a bunch of resources, we post a bunch of videos, downloads, all of that stuff that's exclusive only in the Facebook group, that's all designed to make you a better investor. It's also a great place that you can communicate with me directly, ask questions, exchange ideas, as well as network with hundreds, literally hundreds of other dentists that are all interested in investing and pursuing financial freedom. The network is powerful, and remember, your network is your net worth. All right, guys, let's get into it. I'm Dr. Jonny Walker, or Jonny Withananchi. I'm a veteran endodontist of over 15 years, as well as a self-made multimillionaire in real estate investing. I'm the principal founder of Walk of Wealth, which is an investment firm that helps doctors achieve financial freedom through passive investing. Investing heavily in real estate over the last 15 years has allowed me to take a giant step back from my clinical practice, spend enormous amounts of time with my children and my family, travel the world, as well as pursue my passions, which is investing in real estate and educating you on how to get going. Now let's get right into it. Now, I Googled commercial real estate loans that must be refinanced by 2025. And the answer that Google gave me is that more than half of the $2.9 trillion in commercial mortgages will need to be renegotiated by the end of 2025. Half, which is half of all commercial real estate loans, are coming due by the end of 2025, a time when interest rates have gone way up, over 450 basis points. Now, loans in commercial real estate are very different from single-family homes. In single-family homes, you typically put down about 3.5%, and then you give a personal guarantee. So in exchange for that mortgage, not only does the bank get access to the property, but also you put your credit score at risk as well. Now, in commercial real estate, you put down between 25 and 35%. By today's terms, even 40 or 45%. So much higher equity paid debt or equity part of the capital stack. And then, of course, the rest comes as a form of debt as a mortgage. And in commercial real estate, whether it be office buildings, whether it's industrial warehouses, whether it's parking garages, whether it's multifamily real estate, whether it's RV parks, no matter what, all of these things, all of these different verticals, the income or revenue from these properties will be able to hopefully service the debt as well. And then after they paid the debt and paid all their expenses, they hopefully generate some type of profit or cash flow for investors. Now, what happens when office buildings go from 95% occupied to 60 to 70% occupied? Where you lose 30 to 40% of your revenue. Now, what happens? Some office buildings are more than 50% vacant. Crickets. There's nobody in there. Now combine that with a rising interest rate environment. Interest rates have gone up 450 basis points. So what happens to the owners of these type of assets? They go broke. And as a result, they have to sell it for fractions of what they bought it for. Take a look at this headline. Fire sale. $300 million San Francisco office tower, mostly empty, is open to offers. That's the headline. 350 California Street in San Francisco was worth $300 million 4 years ago. It might sell for less than 80% of that now, brokers say, in a market where office vacancy rates have soared. So now you can go and buy a 300,000 square foot office building that was once sold for $300 million and now go scoop it up for $60 million. That's an 80% sale. That's a great deal. But you're like, hey, what do you mean it's a great deal if there's barely anybody in there paying rent? And what do you mean it's a good deal? Well, hear me out. $60 million to build a 300,000 square foot office building in downtown Chicago, the cost would far exceed $60 million. So you are able to buy a beautiful Class A asset less than what it costs to build, or below the replacement cost. Just from a cost perspective, this is a great deal or an excellent opportunity. But if there are record high vacancies in all major and minor cities across the country, then what are we going to do with all this office space? In Manhattan alone, there's millions of vacant square foot. The brand new World Trade Center that was built as a memorial for 9/11 sits only 50% occupied. And it's not just in New York. When you look at cities like San Francisco, Chicago, Boston, LA, Philadelphia, Atlanta, Toronto, Washington, D.C., they all have tons of headlines talking about the rising cost of living and how unaffordable these cities are becoming. Rent prices have spiraled out of control. Well, we need to get highest and best use of these properties. So now investors are coming and buying these properties, buying these huge office buildings at bargain basement prices, and converting them into multifamily real estate or large apartment buildings. There is going to be a huge shift in demand in downtown areas of all of these cities. Now let's consider what's going on in multifamily real estate in general as an asset class. There are going to be a lot of opportunities and distress in the multifamily real estate vertical as well, because a lot of these properties will have to be refinanced in a high interest rate environment as well. Not just office buildings that are facing this crunch. Obviously, there's a little bit difference because apartment buildings stay full, right? The demand for people living and renting apartment buildings versus an office building where, hey, we don't need this place. This company said we don't need this space anymore. Shows how multifamily real estate, on a risk perspective, is a much lower risk asset class than an office building where the demand can vary depending on market conditions. So we're going to see distressed people trade out of these office buildings that they can't afford to be in, positions that they can't afford to be in. Same thing is going to happen in multifamily real estate as well. What are we going to do to benefit from this potential imminent disaster? Well, a lot of landlords are not going to be able to hang on when there's distress in the market hits. The interest rate risk I'm talking about. Now, if you combine that with a bunch of new units coming online, because now we're converting these office buildings into rentable units and livable space, now what happens is this also starts to put downward pressure on rent. So Class B investors, when you have a bunch of units coming online, you can only compete in two areas, either amenities or in price. Now, the brand new stuff is going to have all the brand new amenities. So Class B investors, the only way that our buildings can compete with Class A is with price. So this could have pressure, a downward pressure on rents. And as a result, downward pressure on values. So it's definitely something we need to keep an eye on and be cognizant of the volume of new units coming online in any sub-market that we're investing in. Because it might be great to say, hey, look, there's no apartments out there available right now. Oh, but guess what? Well, we have a 100,000 square foot building over there being converted into 400 units. We have another one over there that's being converted to 180 units, and another one over there for another 250 units. And now there's another 1,000 units or so coming online that we didn't account for. And hopefully that can be soaked up by having more than 1,000 families moving into the area. So absorption analysis and analysis needs to be done of new units and new development as well. And that's something that's very important to consider when investing in an area, even in the value add space or class B. Now, these type of office conversions, they don't happen overnight, right? They take 18 to 36 months, take two to 3 years for these type of things to happen. And we can see it coming. And right now it's not at a rampant pace. It's very slowly this idea is catching on, and it's catching on in many cities. But now it becomes profitable. Then you can expect big vulture companies, huge hedge funds like Blackstone's, right? And these type of companies are going to come in and start buying big, huge swaths of office space and converting it into residential. The great wealth transfers that always happen from time to time will be happening in the now and into the near future. There's no question about that. And remember, in great money and wealth transfers, money is never lost. Money is only transferred to the pockets of the patient. They're transferred to the pockets of the savvy investor. They are transferred to the pockets of the informed investor. And the people with the best strategies will win in these type of environments. And you're in the right place. This channel is designed to put you in the right place, right mindset, right information, so that you can formulate the correct strategy for you to get on the right side of this great wealth transfer. Hope you guys like this video. Share it with somebody that you think would also enjoy and get great value from this video. Please like and comment if you thought this video was informative, if you agree, even if you disagree. Would love to continue the conversation in the comments below. Until next time, stay safe, be well, live abundantly. Take that walk of wealth, guys. Let's go.